Most traders believe they are in control. They believe they can predict the market, but the truth is harsh. Control is an illusion. Understanding is often replaced by hope, and hope is the most dangerous currency in trading. Jesse Livermore, born in 1877 in Shrewsbury, Massachusetts, taught himself the rules of the market long before formal education could offer guidance. He observed price movements and discovered a universal truth. Markets do not move randomly. They reflect the collective psychology of all participants. Fear, greed, hope, and despair all leave traces on price charts. Those who ignore this will lose money. Those who study it can find opportunity. Imagine a trader entering a position with confidence. Hours later, the price moves against them. Panic rises, and thoughts collide. The trader says, "It will recover. I cannot be wrong." The market does not negotiate with human desire. The internal conflict, the fight between hope and fears where losses originate. The market punishes the mind before it punishes capital. Livermore understood that the number one reason traders fail is their inability to master their own psychology. Every impulsive trade, every defiance of risk, and every stubborn hold on a losing position is rooted in this fundamental truth. Observing the market without emotion is the first step toward survival. Livermore called it reading the tape. He studied price and volume movements as messages from the market, independent of his desire to be right. Patience, observation, and discipline became his weapons. Traders often fail because they mistake activity for progress. A flurry of trades does not equal skill. The market moves with forces beyond the individual, responding to the crowd. To succeed, one must step back, watch, and allow the market to reveal its direction. A trade should be a response, not a reaction. Reacting emotionally ensures losses. Responding rationally ensures survival. Ego is a silent killer. Traders fear being wrong. Yet the market punishes hesitation. Fear leads to late exits. Greed leads to overextension. Hope delays critical decisions. Livermore's success came not from prediction, but from disciplined observation. He waited for confirmation, then acted decisively. This patience separated him from the majority who acted impulsively and failed. Even the most experienced traders are susceptible. They follow indicators, strategies, or rumors. Yet the moment the market moves against them, panic erodes rationality. Livermore's principle was simple. Mastery over self is the first prerequisite for mastering the market. Knowledge without discipline is meaningless. Consider the moment when a stock dips slightly. Logic says, cut losses. Ego says hold. Seconds pass, and losses grow. Most traders repeat this cycle endlessly. Livermore observed that this is the trap that destroys accounts. Markets do not care about human hope. They care about supply and demand, amplified by human emotion. Waiting is a key principle. Traders often rush, seeking immediate action or instant gratification. Livermore's approach was different. Observe, wait for confirmation, and act decisively. A trade should never be an argument to win it, should be a measured response to reality. Discipline is more valuable than instinct. Patience outweighs impulsivity. The human mind is the battlefield. Every loss, every impulsive trade, every hesitation, reflects an unprepared mind. Until a trader conquers fear, greed, and impatience, the market will always exact its toll. Knowledge of charts and indicators is useless without emotional control. The mind governs every trade. Livermore also understood the power of observation. Price movements, volume shifts, and trends are messages from the market. To read them accurately requires detachment from desire. He mastered this detachment. He waited, observed, and let the market reveal its story. Only then did he act. In conclusion, the market does not punish mistakes arbitrarily. It punishes emotional reactions. Traders fail because they act to prove themselves right, not because the market moves unpredictably. The first step toward success is realizing that the mind, not the chart, is the true battlefield. Discipline, patience, and observation are the tools for survival and growth. The market is never wrong. Traders are. This principle, repeated throughout Livermore's life, remains the foundation of successful trading. Control begins with the mind, not the hand. Without it, all strategies fail, and losses accumulate. Loss is inevitable. Every trader, no matter how skilled, will experience it. The critical difference between failure and success lies not in the market, but in the reaction to loss. Jesse Livermore understood this better than anyone. He realized that it is not the price movements that destroy traders, it is their emotional response. Fear, hope, and pride are more dangerous than any market fluctuation. Imagine a trader who enters a position impulsively. The price declines immediately. Panic sets in. Logic says to cut the loss, but ego resists. I cannot be wrong. It will recover. Every second of hesitation increases the loss, not only in capital but in confidence. This is the human trap that Livermore warned about. He identified 3 psychological pitfalls that destroy traders. The desire to be right. Traders refuse to accept mistakes. They rationalize, justify, and often double down to prove themselves correct. The market does not reward ego. Survival demands humility and decisiveness. Overtrading, chasing losses, leads to impulsive trades, exhaustion, and missed opportunities. Traders try to compensate for one mistake with another, creating a chain of losses that compounds rapidly. Discipline is always more profitable than frantic action. Ignoring the tape, price, volume, and trends provide objective information. Emotional traders ignore these signals, relying on hope or instinct. Livermore's advantage came from observing the market's story and acting only when confirmed. Those who ignore the tape, surrender control to chance. Losses are not the enemy. Emotional reactions are. Traders who panic, hesitate, or overreact amplify losses. A disciplined approach to cutting losses is critical. Livermore emphasized, a small, controlled loss protects capital and confidence. A delayed reaction allows losses to grow exponentially. He also understood the hidden cost of emotional trading. The erosion of decision-making power. Fear and hope cloud judgment. Panic undermines strategy. Overconfidence leads to recklessness. These emotions, unchecked, are more costly than the financial loss itself. Observation is essential. The market communicates constantly through price action and volume. Livermore treated these signals as data, not opinion. He waited, he watched, and only acted when evidence was clear. Acting without confirmation, driven by emotion, is the surest path to loss. Consider a trader who loses $10,000. The first mistake triggers a reaction. Impulsive decisions follow, doubling down, entering unrelated positions, chasing profits. Within days, the account balance is severely damaged. This is not misfortune, it is psychology in action. Livermore understood that every mistake grows exponentially when the mind is untrained. Discipline is the antidote. Cut losses quickly. Let profitable trades run. Observe without bias. Emotional neutrality transforms observation into insight. Every decision should be guided by evidence, not hope or fear. Patience becomes a weapon. Discipline becomes a shield. Livermore also recognized a paradox. Humans hate to lose, but allow losses to expand. They fear being wrong, yet delay corrective action. They desire profit, yet overtrade in pursuit of immediate gains. Every trader faces this internal battle. Logic versus instinct, patience versus desire, humility versus pride. Those who control this battlefield gain an advantage that no indicator or tip can provide. Learning from loss is essential. Every setback contains a lesson. Emotional trading obscures the lesson. Rational, disciplined trading reveals it. Every mistake becomes an opportunity for improvement. The key is not avoiding loss, but avoiding emotional ruin. The market punishes hesitation and impulsivity, but it rewards preparation, patience, and rationality. Traders who internalize this principle gain consistency and longevity. They do not need to predict the market perfectly. They need to observe, analyze, and act decisively. In conclusion, the number one reason traders lose money is not volatility or lack of information, is the inability to control emotion. Fear, hope, and greed dictate decisions. Livermore's insight remains timeless. The mind is the true battlefield. To survive, a trader must master the internal landscape before attempting to master the external one. It is not the money you lose, but the mind you lose in the process, that is the real cost. This statement captures the essence of trading psychology. Loss is inevitable, but emotional loss is optional. Control the mind, and the market becomes manageable. Ignore it, and the market becomes relentless. There is a path to consistency and survival in trading. Jesse Livermore discovered this path through decades of observation, trial, and self-discipline. The essence of his strategy is simple but profound. Control yourself before you attempt to control the market. The edge he created was psychological, not mechanical. It allowed him to thrive where others failed. Livermore's approach relied on 4 key principles to 1. Observation before action. Acting impulsively is the cause of most losses. Livermore emphasized watching the market closely, waiting for clear confirmation of trends before entering a position. Patience is not inactivity. It is strategic waiting. Markets reveal their direction gradually, and the disciplined trader must allow the signals to emerge before committing capital. Acting too soon is the fastest way to destruction. 2. Cutting losses quickly. A mistake should be acknowledged immediately. Livermore insisted that losses should never be allowed to grow beyond control. Traders often cling to losing positions out of pride or hope, which only magnifies their mistakes. By accepting the loss swiftly, a trader preserves both capital and mental clarity, maintaining the ability to act decisively in the next opportunity. 3. Letting profits run. Profitable trades require patience. Many traders exit too early due to fear of reversal, sacrificing potential gains. Livermore taught that once a trade confirms a favorable trend, it should be allowed to grow, letting winners expand. Emotional attachment, or premature exit, limits the compounding of gains and undermines long-term success. The market rewards patience more consistently than intuition. 4. Self-mastery. Above all, the most critical asset in trading is the mind. Fear, greed, hope, and pride must be observed and controlled. Livermore believed that internal discipline outweighs technical knowledge. Without mastery of emotion, no system or strategy can succeed. Every trade is ultimately a reflection of the trader's internal state, and self-discipline is the ultimate competitive advantage. To apply the Livermore edge, a trader must integrate observation, discipline, and patience. Watch for trends. Confirm signals. Cut losses decisively. Allow profits to grow. Avoid emotional interference. Every trade should be deliberate and informed, never reactive or impulsive. Consider a trader who follows this approach. They identify a trend, analyze price action, and observe market behavior. They enter with a calculated risk, placing a protective stop. If the trade moves against them, they exit immediately. If it moves in their favor, they allow profits to expand. They avoid overtrading, resist fear and greed, and make every decision based on evidence, not emotion. This is the application of Livermore's philosophy in practice. Livermore also understood crowd psychology. The market is a reflection of collective human behavior. Trends emerge because of the actions and reactions of the masses. By observing patterns and the tape, he positioned himself to benefit from these predictable behaviors. The edge is not about predicting the future. It is about reading the present accurately and responding with discipline. Modern traders often seek complex systems, news, or tips. Livermore's insight is timeless. None of these replace the fundamental need for psychological control. The market tests the mind continuously. It punishes hesitation and impulsivity, but it rewards patience, observation, and rational action. This principle applies across decades, instruments, and market conditions. Even in the face of adversity, the Livermore edge holds. Despite enormous personal and financial challenges, the principles he followed remain a roadmap for survival and success. Every loss, when approached with discipline, becomes a lesson. Every winning trade becomes a confirmation of process. Every action is a reflection of self-mastery. The ultimate lesson is clear. The number one reason traders lose money is not the market, it is themselves. Fear, greed, hope, and pride dictate actions more than strategy. To succeed, a trader must recognize these tendencies, manage them, and act according to evidence, not desire. In conclusion, mastery over the mind is the key to the market. Knowledge, charts, and indicators are tools, but discipline transforms them into profit. Observation converts signals into action. Patience compounds success. Losses are lessons, not disasters. Wins are a reward for rational action, not luck. Master yourself, and you master the market. Every trade reflects your control, every outcome mirrors your discipline, and every decision defines your path. Traders who embrace the Livermore edge survive, adapt, and prosper. Those who ignore it fall prey to emotion and impulsive reaction. The market is indifferent, relentless, and unforgiving, but the disciplined mind creates opportunity from chaos, turning observation and patience into profit, and mistakes into lasting insight. This is the enduring legacy of Jesse Livermore. The market tests everyone, but only those who conquer themselves gain the edge. Control the mind, control the game. Discipline is the ultimate tool. Observation is the ultimate weapon. Patience is the ultimate strength.